Video 2 of 2. Robinhood, good good elevation, and they're holding. So I see a risk at 16. If you lose 16, all of this is frothy. So from the standpoint of having areas that they need to cover, let's see here. I'm going to start with this one and that one. This is imbalance that they need to get back to. Okay, it's an area of interest. There's another one. I'm going to put it as a global. And there's another one down here. Less urgent, of course, but nonetheless, it is an open area of interest. So I'll push that out of the way. So my concern would be is if they technically lose that support from just a few days ago. Oh my gosh, okay. And of course you have resistance, but it's pretty old. So just like you have areas of interest down here, you have some out here. Like I can see a reason to go to 26. So don't be short for no reason. That's what I'm saying. If they manage to come out and take the 21 out before they come here, they're going to go and close some open interest areas up there, and they can come down here later in time. So don't anticipate which ones get filled first. Go with the flow and know that there's a zone they might be tackling. How do I deal with this? This coming week, I would treat 19 as an exit zone, and I would treat 16.2 as a catalyst lower. So if I'm shorting here, it is a tactically correct thing to do. You short inside of resistance, and if it curls back down, you have the opportunity to ride it short from here to here and down to here. That's one trade. But you need to also know when to quit. So if you short and it goes up 11% and you don't exit, you're going to lose a lot of money. So if you twist my arm, I would be short via some credit call spread. However, in 3 days, they're going to report earnings. So I have no idea what they do next. The earnings report is a complete mystery. And if you say, no, they're going to report great earnings and you take the trade, you're making a mistake. I guarantee it to you. If you want, come into the live room. I'll prove it to you mathematically why you're making a mistake. Because the reaction is a complete coin flip. It's not about the results. Look at Apple. The results were less than ideal, and it rallied. And it's not the only proof. IAT, I don't know who that is. Another regional bank ETF. Hopefully it's not the same person. Why so many of these regional bank ETFs? Why not go with something that's liquid? I don't know this one. So technically, if you go above 43.50, open air, 2 times failed. Maybe this time works. I think if you want that, I would buy the dip. You should have support scattered from 40 to 38.50. You can be long. If you're long already from down here, fine. I know what you're targeting. So we shall see. A breach of 43.50 or 44 will get you 49 area. IBIT. I have not traded this one. I prefer the one I veto just because it has more history. This is an exit point, this area. It's a wall, but this doesn't show history. So it's just a recent short-term resistance. Above it, there's open space. In this case, it's not open space. If you want to see what's above there, you have to pull up the Bitcoin chart. If you're just trading this one like it's its own stock, you're making a mistake. So here's the warning. You have sellers above, and they must hold level at 32. You lose 32, you're going to 28. These are the exact same comments I gave you about Bitcoin. So Johnson & Johnson. I believe we went long via something, and it should be working because nobody's asked me about it. 155 is a problem. I would not be investing in Johnson & Johnson. I don't know their fundamentals. They're not as exciting as I'm looking at the P&L below. It isn't like an ancient company. We're talking ancient. 1887. You lose 143, you're going to end up in the 135 area. That's a technical warning, but it's also incredibly strong support. So in order for Johnson & Johnson to lose 143, in order for it to lose that, I think the stock market has to be in shambles. Now, strong support, yes. Strong resistance, yes. 156 should be a wall. So try to make money in between those from trading or invest in it for the long term. Here comes JP Morgan. They hit target 1 and 2. Target 1 and 2. So I'm no longer short. I will short it again if it pops up to here. Here, I'll put an alert with you right now. Resistance above. Anything above 194 is resistance. Just look at these sticks. And support below, because it was a huge flush. So I wouldn't short it with a debit put spread anymore. I would short rallies in a credit call spread, just because this flush got a lot of sellers out, but it also placed a lot of sellers up there. So I don't know if they're going to do that again, but I would rather short it by selling call spreads on rallies. Right now, it's a no touch for me. Actually, I need to go see here. Yeah, I think this is gone. All right, LULU. Am I long LULU? I don't remember. LULU or Alta, maybe both. Good companies fallen. Look at the P&L. Not my opinion. It's a fact. Look at the P&L. Pretty strong. And they just fall in and out of favor for some reason. Taking out 368 will probably get you another 20 bucks, and then you have to face another beast. And if you take out 410, you can get to 460 in a jiffy, but that's a mile away. So right now you have to tackle the first wide support zone that was lost, and that's every bit of real estate above us is resistance. And you have a lot of support that needs to hold. For some reason, if they lose 330, that means the stock market is in shambles, like that comment on Johnson & Johnson, and this one would go a lot lower. I don't think it goes there alone. And it has the opportunity to claw back some profits. So maybe somebody will upgrade it. I mean, it needs a catalyst. And the stock market itself is not going to do it. So I would not short it. Oh, let's see here. What did I have? Okay, so check this out. They lost a pretty important ledge at 441. And any approach of that, in case you had any qualms about it, I would exit in a heartbeat. Oh, these lines, I remember those. Somebody had, I was trying to help manage a trade. A lot of resistance above. Pretty ugly chart, let's put it this way. Ugly as in, it doesn't give you a solid anything. No solid support, no solid resistance. It leaves a lot of room for whooshes out of nowhere. Intuitive Machines, interesting. Looks like a SPAC. Okay, let's drill down. I don't know the P&L. What the heck is this? Grant? Is this a grant, a lawsuit? What is this? Earnings as big as sales. Okay. Trigger at 5.7, 5.8. Anything is possible above that. Exit anywhere close to 6.8. And you better hope you hold 4.7. Otherwise, floodgates below. If you're trading penny stocks and you don't know charts on your own, I don't know if you should be trading penny stocks unless you know something about the company business. Then that's different. Just own it for the long term. All right, $20 is a catalyst to get you $5 and then exit. Who is this? Oh, Mara. Perfect. So I don't trade the stock because it's pretty crazy. And you better not lose 15. I think if you lose 15, you have a good chance of losing 14, which would bring 10 or 11. Earnings are coming up in 4 days. Flip your coin, shine it up first to get best luck, best report, best results. If you take out 20, the upside could be that blue box up top. Yep, the bottom end of the blue box. And look left, you will see that that was a prior fail. Again, into the earnings, there might be some trades that you could do that are smart, other than just hoping. Mongo, so I took a long kind of in convoluted ways. So if you sold puts or put spreads, you made money. If you bought calls, maybe you did make money. If you bought shares as an investment for the long term, I don't think you did badly. Decent P&L, an investment possible, a trade possible. So you better hold 320. That's all I got to tell you. If you lose 320, 250 is fair game. It's not an obvious target, like an immediate target, but just this is a warning like Johnson & Johnson and the other company and LULU. Like it could go there, but I think the market would be in shambles. Now rallies into 420, I would exit pretty quickly. So up here into 420, 440, there should be a lot of sellers. MELI, I wouldn't touch it here. So if somebody's looking to invest in MELI now, I push back on you. Why now? Why not a week ago? You would have gotten it for a massive discount. Why now? Oh, but because it's beautiful. Okay, so next time get the gumption to buy it when everybody else thinks it's ugly and you know it's beautiful. So check it out. It doesn't take much to say let's buy it on a dip. Why not wait for one of these things? Okay. I don't disagree that it's a good company, good P&L, nice and orderly. I can tell you that using options for it is not very pretty. It's manipulated. The market makers that run the stock will take advantage of you, so you better know what you're doing. Resistance above into 1800. You take out 1830, you may get to 23, but you have to face these sellers. So that's why I don't think it's an emergency to chase it. At least sell puts and not buy calls. Meta, I said step away from this company, and I drew some lines, and they came to fruition. The problem with this one is the future concept of its success is tied to ideas, not facts. And for the bears, it's a huge dilemma because they have facts right now that don't warrant a short. In other words, it's not like a company saying, oh, in the future, I'm going to do this. They're saying that, but they already have a very successful current situation. So they're kicking ass now, and they're saying we're going to completely reinvent ourselves for the future to the point where we rename the company to match that future concept. That's a pretty scary company. I wouldn't get long it here. I wouldn't short it either, is what I'm saying. So you either invest in it for the long term on dips, or you just forget it exists. And this is not a dip. This is just taking back what happened the other day. So in February, we had a huge pop, and now we fell into it. And now we're trying to get out of it. This is the concept of the market. In February, the February levels have been in contention in the market as well. So in this case, if you lose 400, you're going to 340. Future or not future. That's what the chart says. The chart also suggests that a rally into 490 should be an exit point, because it's going to take a mountain of exercise, a mountain of effort to break out of this neckline right there. So you can clearly see it. I'm going to change the color, and I'm going to put it globally. And if you want to copy this and put it down here, you will come up with something similar, except this one here is a zone. Okay, so these are your bumpers. You get long, you get short here, you get long here, you get short here, you get long here, until one of those lines gets busted up. MSTR, oh boy. I'm a fan of crypto, and MSTR is not the way I would trade crypto. It's a good company with good management. You have the opportunity to go to 850 and 600 over the next 6 months to a year, as you have the opportunity to go to 1750. So which way is it going? Nobody knows, and I'll prove it to you. Go to the options chain and get a quote from the market makers who control the price action to a degree and have a lot of contacts everywhere. They don't have a clue. Why? Because they are charging you an arm and a leg to buy a call or buy a put. You can make, I don't know, 50,000, 90,000, 100,000 selling options in that thing in this year's contract. Why? You can't do that with MELI. Why with this one? Because they don't know. They literally don't know what to charge. Just like you go to Allstate, they say, how much are you going to charge me for me to insure this car? They look at your profile and what the car is, and they'll say, we have no idea. So we're going to charge you $10,000 a month for you to insure this car. That's the same concept here. So if they don't know what to charge you, how do you know when to add to your position? If you took a position, put that asset to work. If you own more than 100 shares, you should be selling covered calls on it every week or every month or every year. It depends on how active you are. You can drastically hedge your bet without being short. So I would suggest you look into that how to put your asset to work. Now, having said that, 1400 looks very pivotal. You can see it, the blue line on my screen. And they need to hold the recent lows of this. If you lose 1,000, you're going to 650. So 850 to 650 is your area if you lose 1,000. Meanwhile, you need to recover 1,400 to get breathing room. All right, so I would be selling covered calls in the stock on strength. And by the way, there's math. So if you're trading crypto, earlier I said I don't like the stock of whatever because it's tied to crypto pricing, right? This one is too, 1-to-1 to a degree. And the problem is, if you do the math on the balance sheet that this company has versus whatever income it brings, I think the valuation of the Bitcoin inside this company is double what the value of Bitcoin actually is. So you're paying a premium to trade Bitcoin. If this stock is rallying, Bitcoin is rallying. If Bitcoin is rallying, this stock may or may not be rallying. Why wouldn't you trade Bitcoin instead of this stock? You see the dilemma I have? I like the guy. I've learned a lot from him, the CEO, but I wouldn't trade his company. I would rather trade Bitcoin directly. The valuation of Bitcoin on their balance sheet is almost double what it is outside of the balance sheet. You're paying a premium. Okay, Net. It's a company I would have gone long on the dip. Maybe I did. I don't remember. Last week was fuzzy. I'll revisit my portfolio when the market opens. I don't do a lot of portfolio management on the weekend for myself because I'm all over it all week long. 82 needed to hold and they lost it. The target of that is a little bit lower than here, so it may fall a little bit more. But it is in a zone where there should be buyers. Unfortunately, it's not a hard line. It's a zone and it extends all the way to 60. So the only way to capture that kind of a scenario is to sell puts that allow for more downside. So I would be a proponent of catching this falling knife with kid gloves. And rallies are going to find a lot of sellers. So if it comes back to 88, and if I was long, let's say I got long at 96, and oh my gosh, I'm down 60% now, and it comes back to 88 and I'm only down 20%, I would exit and then reset for a better entry. Netflix, okay, so the earnings box, that big blue box, is this global? Yes, is what they're playing with right now. So let's use that as our guide and zoom out and say, all right, here's what happened. It was doing well, and then it had a huge earnings reaction, and now it's struggling to get back into the bottom end. So I'm going to tell you, if it doesn't get back to 600 this week and hold, it's in danger of it losing 540 and coming down to the 515, 520. So how about we say, if it doesn't firmly stay inside this box, it's definitely inside this box in the next couple of weeks. All right, now taking out 640 opens up anything, clearly. But look how tough that looks. It will need an upgrade of sorts. Not that I need an upgrade. I'm telling you what the stock needs because that's how Wall Street operates now. If you lose 540, you're going down to 510 or 500, maybe even lower. And I wouldn't chase it going into this clump of sellers. Technically speaking, I would buy the dip into 1120. Good reaction, decent P&L. I haven't, earnings in 9 days. So I wouldn't touch it. For me, I would trade it after the earnings. If I have greens into the earnings, I would sell covered calls if that allows. I don't remember the options on this stock, or I would not get long. And if I'm dying to be long, I would take a token position in shares and sell some covered calls against them. NVDA, I've heard of it. I have heard of it. Check it out. What? I don't know when I drew these red lines, but dang. Okay, so pop and drop and pop. So you see how they want to take out 900-ish, 910 to get to 980. Can they do it? That is the company that can do it. Area of interest knocked out. Area of interest knocked out. Are you kidding me? Let me zoom in. Yep, let me zoom in to different time frames. Okay, so this was an area of interest, and it's interesting how they came down and knocked out most of it. So if I were to be honest about it, I would say there's just a sliver down here. I'm not sure that's worth coming down and getting it. And this one also is a sliver. So wow, they were crafty about it. So let's zoom back out to that same picture we were looking at earlier here. There's no need to come back down if the market doesn't come down. And this is the market. A year ago, this one caused the S&P to break out. It was stuck. And then it pushed Microsoft over the edge. Microsoft took off, and they both ran and took the S&P with it. So we do have that scenario now. This one just needs to be above 910, and it's going. And it starts tackling prior fails. And there are prior fails. So in order to see those, you need to zoom back out to a daily, take out all of those, and you'll see. The prior fails are there, but this stock can make an all-time high in no time. Don't short NVIDIA. And in fact, that is the most bullish statement for the market. If NVIDIA does what it can do, the bears are toast in the S&P. We are going to our target of 530 to 560. Remember that? On the SPY. That's our target from 460 when we broke out. We had a hiccup. Okay, so NVIDIA is the stock to watch this week. I'm making notes for my later videos. Palo Alto, not a fan. Buy the dip was okay, but the dip was just to test the prior support. So if you went long at 284, you did okay. You have sellers above, a lot of sellers, starting at 304. Don't take my word for it, it's right there. What lines do I have? There you go. Resistance, that's definitely there. Area of interest, so we could get to 307, 308 and not change anything. Bunch of support below. Look at this, how predictive was that? That was pretty good. So you're kind of in prison right now. You have a bunch of buyers going into 260 and a bunch of sellers going into 324, and you're right in the middle. You could go to 280. So maybe a credit put spread and a credit call spread, an iron condor, or just a credit put spread if you like it. Path. Wait, does that have earnings? 15 days it gets earnings. Path is inside my target. We've drawn lines before, so you've heard me say words about we could come to here, and here we are here. So if you got long in this area, okay, you're listening. That's a good place to be long, but you should know that there's resistance above. In about 3 weeks, we should get some earnings catalyst up or down. I'm not sure. Pivotal zone. This one continues to be pivotal, so you have to pay attention to where we're at. Support below. If we fall into 16, I would get long there if I'm not long. I think rallies into 22 will be faced with a lot of sellers, so be careful which trend you chase. Let me zoom back out and see what it looks like on the daily. Ooh, okay. You see how pivotal this area is? Wow. All right, so let's mark it up. When is that? 2022. Look at this cluster. All of this time cannot take it out, and we're still struggling with it right now. And look at this top. Wow. I mean, they don't make this often. Check this out. $22 is the number for folks. So dips into 16 or lower, absolute entry points, exit points 22. So you have a pretty good range to trade it. And you can invest in it and still trade around that range to make your investment better. PCAR, nice dip. I would be selling rallies. They're selling rallies. We don't know where they want to end up. So picture yourself a channel, and they're going down inside the channel. This is not like, oh, they touched the edges. No, this is a behavior. They're selling rallies. In fact, the channel may be like this. So the next rally, exit, because you do have a channel. They're selling that. And I don't know how steep it is, but I do know that this was important to hold. So any entries inside this area is in anything above 110 is a selling point, like exit. Earnings in 80 days or so. So The best support is below 88. Good morning. Anything below 88, actually below 98, I would start to be interested. And I must have said 88 when I meant 98. This area is interesting. So I would not catch it with like buying calls. If you're selling puts inside this zone down here, that's probably the best way to do this. I don't know what they do. The P&L looks okay. I mean, they have sales and they have earnings. This one reports earnings in a day. I like the company. It could get to 28. If you're invested in it, you don't even need to worry about it as long as you're not all in. The last time I got long was, the lowest I got long was in the 7s. Yeah, 7. Is that crazy? And it wasn't that long ago. So I'm not going to touch it up here as a new investment. If I wanted to own it for the long term and I haven't owned it yet, I should have been in it already. How about I just do like 10% of my position? And this way I'm in it. And if it takes off, I'm in it. And if it falls apart, I can double, and double again. The market loves it and hates it. They hate the CEO. They hate the company management that they make too much money. But this is an old school company. It's not new. They've been around for like maybe 12 years. And the management team is old school like Silicon Valley experts. So this is not a fly-by-night newcomer. It's not an ARK-K company. This is old school. So respect it. All right, we'll see what it does, the stock, on the headline. It's not about the quality of the report. It's about the expectations. You want proof? SMCI stock fell, and the company grew sales 200%. Chew on that. They grew 200%, and Wall Street was not happy with it. It fell, SMCI. So this one could grow as much as it wants, and it could fall or rally. We don't know. Take out 28, you're going to the moon. Lose 20, you're going back to like 15-ish. I would get long. PayPal, I would not have chased it. I don't know why the company trades like it does. I traded it on the long side for us on the way down, and it was a struggle. We made money, but it was a freaking struggle. So now it's mired inside of the muck. Okay, this is a weekly chart to show you how not attractive this stock is. 76 is an exit zone for me. Reload on dips. It's a good P&L. Something's going on above our pay grade. There's something going on. Why does Wall Street hate it so much? What do they know? What are we missing? All right, so rally, sold, new low. Rally, sold, new low. Rally. Are they going to sell it and make it new low? I'm not sure. I would get long PayPal on dips if I can sell puts at or below 50. QQQ, I will have a detailed video today. I don't know what you're asking here. Maybe you're just trading. Well, for the last few hours, they're buying dips. And for the last few weeks, they're selling rips. And now you have to deal with the resistance through 450. RIVN, no touchy, no touchy. Okay. From an investment perspective, I wouldn't touch it. From a stock perspective, it could soar or collapse in 2 days. I have no idea. It's either $6 or 15. Flip your coin. If you wanted to own it, sell a put into the earnings. You'll get a lot of premium for the money. And maybe you get assigned at a lower price. You get your stock for cheap. If not, you made some money overnight. But you won't be long for the long term. So this company's burgers ingredients cost more than the burger price. No bueno. The cost of goods are more than the price of the car. That is not possible to survive. I see a lot of them in my neighborhood, and I'm seeing the SUV. For some reason, there's one SUV that I saw that looked small. Do they have one on the street already? Like, I know they have a giant truck, and they have a giant SUV. I saw one that was like a tiny Bronco, like the smaller version of the Bronco. That's my impression. Maybe I missaw, but I saw a different looking SUV on the street this weekend on my way to the gym. So I don't know. They're down the street from me. So it is possible that somebody that works there owns one on the street that is not yet released to the public. I'm not sure. Anyway, sellers at 14 through 16. You clear 17, you're going to 25. If you make a new low, I don't know, 4, 5, we shall see. Hopefully for the investor, it pops one more time. If I'm long this company and it pops and gets me out of trouble, I would exit so fast until management tells me how they plan on changing this cost of goods things. I don't know if it's a buying power thing or an actual makeup of the material they buy. They need to source better materials because the cost of goods bigger than sales is too much. Technically, I just gave you the coin flip outcome. ROST. I believe this company, is it? Or Kohl's say they want to be out of business. They're looking for a buyer. Oh, maybe not this one. Wow. ROST store was up there with a P&L like this. What's wrong with these people? What is wrong with this world? How is a stock that's flat sales act like this? What? Yeah. Technically, I can explain it. 120 is your pivot. And the target from that is way higher. The target is, believe it or not, is like 170. So don't short this company as long as it's above 120. They're hunting 170. So if you just got long on this dip, yeah, I get it. I know what you're doing. If you're investing in this, no, this is a tactical trade. So short-term risk, you must hold 127. You lose 127, you're going to get an entry at 116, $10 lower. So that's the warning short term. Long term, I get what you're doing. With all of these peaks and markets are being an all-time high, maybe they're not going to get there. So I don't want any part of it. But I know what you're doing. So maybe you wait for a loss, 11 days earnings of 126, and you get lucky before the earnings. So be careful with that. Okay, video number 2.